Just joining, welcome. I want to talk about uses of candlesticks and patterns, like how to use candlesticks and patterns for your trade entry. Um, if you watch on my screen, you see we have up to 8 patterns for of candlesticks for entry. So I'm going to be talking to you about them, so you can see which of them that meets your uh, trading strategy, from which you can decide to take entry for either a buy or a sell. And I will take time to explain to you how they work, each of them. I wish I can digest all of them today. Otherwise, I will come live in the next, or come live next time to do justice to it. Okay. Notwithstanding, though, if you're just joining, as I said, you're welcome. Now, these 8 patterns you can see are strategies. 8 patterns of strategies that um, your entries can be used. You can use for trade entries. Okay. So every trader has their own trading style or strategy for entry, for trade entry. What that means is there are things you must see that will help you know if you should be taking a buy or take a sell. Like before you take an entry, there are things you must see on the chart. Okay. So these things that you must see are called confluence and confirmation. So here you see we have a number of them, which I would list now. We have the continuation of trend pattern, where you see something that tells you this trend is continuing after what we call retracement or pullback. Okay, I will talk about each of them one by one. Here we have the end of trend. When you know that, when you see this, you know a trend is ending, then you can trade the reversal. Here we have the reversal of trend, which is same as, you can say this to this too. This is the reversal of the trend. The trend is just exhausted and there's a reversal happening. That means a new trend wave is happening. Now, this is an uptrend, but there's something we call correction, or you can call it retracement, whichever way is okay. So in this scenario now, we have where we have retracement happening back to the trend, or you can call them correction. So there you can see it is called the end of the correction. Okay. So we now have bounce and drop. This bounce and drop is when you see market bouncing off resistance and support. That is bouncing off those zones. Some persons trade bounce though, which there's no crime in it, because I think I said this in the previous market. I say most of the times market goes, not most of the time though, the market goes in 2 ways. It's either the market is buying, which is going up, or the market is selling. It goes in 2 ways. So there's nothing like at the middle of the no. The market is either buying or selling. So if it's buying, you want to be taking a bullish trade. If it's selling, you want to be taking a bearish trade. So these are the two only moves the market does to be profitable. Okay, so there are persons that trade the range like this. No crime if you trade the range, no crime. Okay, then we have the breakout also strategy. This is the breakout strategy. This is when you have your structures or patterns and the market breaks out that pattern and goes your way. That is a breakout pattern. Okay, breakout pattern is one very profitable trading style. It's one very easy trading style that you can trade. Breakout gives you a lot of confidence or confirmation that this market is going your way. So breakout strategy is another good strategy too. You want to look at for. So we also have this guy we call false breakout. Okay, the false breakout is when the okay, I will talk on that though. But when market manipulates above a particular zone, come back, close back in, and once that happens, it goes the opposite direction with speed. Okay, so that is the false breakout. Then we have a pullback, which we call retest. Okay, we have a pullback that we call retest. A pullback is when you have a break at a zone. You can see the market breaks the zone, come for retest, and goes back up. That is what we call a pullback, or you call it retracement or retest, whichever you are still correct. Okay, so whichever you are still correct. Now, let me start from the number one we have there. The number one we have there is called the continuation of trend. Now, when we have a continuation of trend, there's something that gives us that a trend is continuing. And I will zoom in and I'll show you how to look out for this. Now, for this one, this particular one, just look at this now. You can see this market is trending up. From what you can see here, it's trending up. Okay, this is an uptrend. So when you have an uptrend like this, you want to know if it's going to continue or reverse, just like you see here, reverse. If it's going to continue or reverse. So there are factors that will help you to identify that. There are factors that you will see. When you see them, to tell you that okay, this trend is done, is reversing, or no, this trend is taking a break, which we call pullback, or we call them retracement to rest. Then continue the original direction. Okay. So one of the factors to look at for one of the things to see is when the market is giving us a structure. Okay. So structures are one of the things that when you see them, it tells you if the market is still continuing the trend or is likely reversing. So let me bring you to the structures now. Talking about structures now. Look at this here. Once you have an uptrend, the market forms the structure of making higher lows and higher highs. Okay, this is the simple structure for an uptrend. When it's making higher lows and higher high, this is the simple structure for an uptrend. Once you can identify higher lows and higher high, then boom, that is you confirming this is an uptrend. Okay, so once you can confirm the structure, you want to see market keeping to that structure, continuing in that structure. That is when you know, okay, definitely this guy is going my way. Okay, but anything outside of that structure, you're definitely on your own because definitely the market will be, or hopefully the market is reversing. So, what do I mean now? I'm talking about continuation. If you watch here now, you see this market maintain the structure. And what is the structure? You can see we have a low here. We have a higher low here. We have a higher high, sorry. We have a higher low, a higher high, higher low, higher high here. We have the, okay, we also have a higher high here. Then the market came, gave us this low. Now, like an inducement. No. Now it came back, give us another higher high around here. Now, after that, it came and gave another higher low. It didn't come back to sweep this area. It didn't go below here. But rather, it maintained the higher low. So as long as it maintained that higher low, it's telling you that this structure still holds. The bullish trend still holds. This is one of the things to identify a trend that continues. The second thing to confirm a continuation of a trend, which, as I said, we have an uptrend here. Uptrend is one. You have a zone around here. This zone here. Okay. Mind you, a market must make a new high. It must make new highs. Those new highs must break the previous high. That is what tells you that you're still holding an uptrend. The previous high must break the current high. If this keep happening, then you know it is making an uptrend because an uptrend is when you're making new higher highs. Okay, so when you see higher highs, you know it is making an uptrend. And once it's making that uptrend, this strategy is one of the simplest strategy you want to trade. One of the simplest strategy. What do I mean by that? Now, look closely now, you will see that this was a zone here, and this zone was broken at this point where this guy uh, broke this bullish candle there. So once that zone was broken, you can see the market continue going up. Okay. So once you see that, you know this is a continuation, just as it is written here, continuation of the trend. Okay. So once it is broken this zone, then it is sure for you that this market is continuing the trend, and that is when you want to take your entry. Just at that point where you've confirmed the trend continuation. You can have your SL just around here, and you can target your TPA to the next zone you can see. Now you can see this trade can be something around 1:8 or 1:10 ratio to 1 ratio, which is a very, very sweet entry. Very sweet one. If you're joining, guys, you're welcome. Make sure you subscribe to my channel. Make sure you share, and also let me see your likes, guys. The more you tap the like, the more YouTube is going to share this live session. and a lot of persons are going to join us to learn. So please, you're getting value here. The best thing you can do for me is to appreciate what I'm doing. So let's go ahead now. So for trading the continuation, you wait for a confirmation of the structure formation. The continuation of the structure formation, that is what you need to take a continuation trend. Why the continuation trend is sometimes most persons you might miss to enter a buy here, you might miss to enter here, you might miss to enter here. You might even miss to enter here. You want to enter at a place where you now get a fresh confirmation that the buy is still in progress, the trend is still bullish. Okay, so what is that confirmation? The first confirmation is that the market breaks this zone. That is it. Then you look for other candle confirmation. In the master class, I teach like 4 to 6 conferences that you will see before you take trade. I go deeper in the technical analysis where I show you 4 to 6 conferences that you must see before you take trade. And when you take that trade, you have 99% win rate. If not, let me just say 95 though, if not 99% win rate. Because if you see the cloud getting dark and it's becoming cloudy, we all know it's telling you that it's going to rain. So when you see 2, 3, 4 factors that tell you this market is going to continue bullish, then these all of these are called your confluence. This confluence gives you the courage, the motivation, and the confirmation that the market is going that way you have predicted or you have analyzed. And you can be taking such a trade even with small risk. As you can see, as I told you here, this is your risk here, and this is your reward. This is like one, as I said, this is like 1:8, 1:7. If not 1:10, this is to the reward ratio. And this is a very soft trade. Okay, so let me go down to the next one we have, which is the reversal kind of trade. Now, just as I told you how to trade continuation, I'm going to show you how to trade reversal too. Now, what do I mean? Remember, I told you the market would maintain its structure. Please, if you're joining, make sure you subscribe and like. Make sure you click on the bell icon so you don't miss out whenever I post great content like this or whenever I come live. Okay, and make sure you share this video, guys. Let me see the likes. The more the likes, the more persons are going to get to reach this video, and the more they will watch and learn. So let's just not learn. Let's also try to share so that other persons can also learn with us. So let's go ahead, guys. Now, as I said, let me teach about the reversal now. One of the things to spot out for a trade is reversal. One of the major issue some traders will have is what we call reversal, trend reversal. I know majority, if you have that challenge, please put it in the comment section now. If you have that challenge, put it in the comment section. I was having some beginner class for some students. I think that was last week, one of them, and the question that I keep getting is, how do I know a trend is over? How do I know the market is reversing? Even in my early days, this was a problem. How do I know the market is reversing? That is one of the. If you know when it's reversing, then you should know when to jump in. That is the question. Okay. If you want to trade when you're sure this market is now going in this direction, not you're guessing. You have 90 to 95% chance of knowing that this market is going this direction. So if you know that market is going that direction, then that is a good one for you. You just snap in and make good trade. Okay. So let me tell you how to confirm reversal of a trend. If you're new, make sure you subscribe. Make sure you like. I'm not seeing the likes, guys. I'm not seeing the likes. What I'm teaching here is what is part of a topic in the master paid class. You're getting it for free. The best you can do for me is just appreciate. Let me see the likes. Let me see your appreciation, and that's all. Okay, let's go ahead, guys. Now, looking at this now, this guy was trending up, as you can see. Okay, and what is the trend? What do we know? What do we use to identify a trend? I just finished that in the continuation trend. I said the market will keep giving you new structures that are breaking the previous structures. That tells you that the market is trending in your way. So what do I mean by that? If I can stretch back, you see we have a low here, and we have a higher low. This is a high. This here is a high. This is a higher high. This is a higher low. This is a higher high. Okay. Now, once you see this happen, the market is still trending in the direction, it's still trending up. But once this structure is broken, then you know that that trend is over. So how do I identify that? Now, there are two things that happened here, and one of them is the conference I teach in the masterclass, where you see you use candlestick also to confirm this conference. Okay, this book I'm using to teach is one of the books that contains uh, deeper secrets of technical analysis, the deeper side of confluence to confirm trade, confirmation, chart pattern secrets. A lot is involved in this book. If you need the book, you're free to hit me up, but definitely I'm just using it to teach you guys for free. So let's go. Looking here now, you can see the market made a new low here, a new high, and that is liquidity sweep that just occurred. Now, what happened? The market came back down to this zone, gave us a new low. Mind you, let me take this up. We have this low, we have a high. Now, what do we expect? It should give us another new higher high and a new higher low, right? If you've been following, we expect it to give a higher low because it comes like this: high, higher low, higher high, higher low, higher high. But it didn't happen that way. Rather, we have this low, we have a high. Now it gave a lower low. Follow me. That is a lower low. And now a lower high. That means the trend has changed. Okay? The trend has changed. This is what you use to confirm reversal of a trend. And that is where you want to take your entry massively. Once you confirm this lower low formed, this is a lower high. So this is a high, this is a lower high. Then once you can confirm that, the trend has just changed. That's an opportunity for you to take your sniper entry. I don't know if I showed, okay, I wish I can do that. I would have shared my screen and show you where I took sniper entry on gold massively, and I think we hit like 2K plus. So now what do you do now? Once you see it giving you a new lows, then you know the trend has changed from being bullish to bearish. Mind you, this was our overall low there, but now it has broken, the market broke the low by taking out this structure. That is the BOS. Now we have a new low here. Now we also have a new low here. This is new BOS. Okay. So please, I'm not a trader, a coach that uses more of the trading terminologies for those that really don't understand. So I like to go straight up. At the WordFS Academy here, I teach trading like I'm teaching a 2 years kid. So no matter where you're coming from, no matter your field, no matter your culture, your language, whether you are a pure novice in pressing phone, you will learn forex from me. It is very simple. So now, what makes you to understand that this trend has changed is when you see the structure change. Also, just as I said, we have our overall high here, previous low. Now the low is taken out. Now wait for the market to come. If the market doesn't take out this high here, then it is sure for you that a trend reversal has happened. For those that are just joining us, I just finished teaching about confirmation. Now I'm talking about trend reversal, how to identify reversal. By the time I'm done with this session, I bet you can identify trend reversal with ease. So once you see this play out, then you know, once it doesn't take out this end, then you know that definitely it's going to be a change of trend. So what happens is you can see the market came all the way here and came back down. Now took out this low, give us a new low. Okay, came out, give us a new high. Now we have a high. This is overall high. Then we have a lower high here. This is lower high. Sorry, we have a lower high here also. Mind you, before we are getting higher high here, but now we are getting lower high. So with this, you can identify that a trend has changed. So how do I trade the trend as I did in continuation? One is you wait for this to form. Now, another way to identify this is probably you have your trend drawn. Like we have this trend here now. This is our trend here. Okay. Now, if you watch, you're going to see now this trend broke here and came for retest. For those days, this is what I go in depth in the master class. Most of you might not understand this. Some may. So here you have a break and retest. That is also where you know that the trend has changed. Okay. That is where you know the trend has changed. That is when you want to take your entry here. Take your entry here. Have your stop loss around this zone, SL. Then you target the zone, overall zone of your TP. Now, as I was saying, I am not that coach that brings you a lot of terms, terminology, and at the end of the day, you don't know what you're doing. So what you want to do is identify how to take trade the simplest way. The simplest way. What profitability in forex is simplicity. I'll repeat that again. Simplicity is the way to profitability in trading. It's not adding all the junk on your screen, buy this indicator, buy that trading board. But no, simplicity is the road to profitability as a trader. That you tell anybody the word says so. Why? Because you need to see the clear chart. This will help you know. Just imagine you're walking on a road you have not been to before, and all you can see is bushes, grass is covering your view. You don't know where you're going to. You might not see clearly. But if you have a clear picture, you have a clear road, you can see further where you're going to, and that will help you make informed decision whether to continue the journey or to reverse. That's exactly what is happening here. Okay, so a clearer chart helps you to see a bigger picture of the market, and this will help you make good decisions as to what kind of trade you want to take. Okay, so please keep dropping your questions in the comment section. If you have a question or a topic you want me to talk about, hit it in the comment section and I will go right away and answer you. Make sure you subscribe. You don't want to miss out whenever I'm live. Yes, you don't want to miss. I tell you, when you come to my live session, you must learn something. It's a must. Okay, so having said that, when you have a reversal like this, we want to wait for confirmation. Okay, one thing is to see reversal, another thing is to get confluence for that reversal. The confluence will help you know if that trade has given full permission for you to take your entry, or probably the reversal is not yet completed. So those factors are factors you want to look at, then determine, okay, whether I'm taking this trade or I'm holding, I'm waiting. Mind you, there are three things before we look at for trade. One is to know. Two is to wait. That waiting is for confirmation. Three is to execute. Execute is to take the trade. So one is to know. What I mean by know is know market, know the zone of the market. Is it reversing now? Is it continuing? Is it bullish or bearish? You have known that. Good. Two, wait. Wait for the market to tell you, okay, it's time to buy or it's time to sell. It's time to enter, it's time to exit. You have to wait for that. Most traders don't have the waiting patience, and that is why they blow account, as in blow back to back. Okay, so when you wait, the third one is to execute. That is when you now take that trade, sniper trade. By this time, you are now sure of what the market is doing. Okay, so you want to take that sniper entry once you're sure about what the market is doing. As I say, if you have a question, drop it in the comment section. Drop it in the comment section. If you want to join the masterclass, you're free, guys. Hit me up on, okay, let me do this. Some persons, the last session, someone was saying they didn't get my number. Okay, my number is this, plus, it is plus 234 3582. Okay, that is my contact in case you want to join the masterclass. Now, let me continue to take all of this. So, two ways, two ways to identify this. As I said, I'm doing a recap, sorry. One, you wait for the market to give you lower highs and lower lows. So what are the lower highs? This is a high, this is a lower high. Now we had a low here, but it has given us a lower low. Okay, this is a change of character. This is a change of character. That is a reversal of trend. But to confirm that, that is where you want to take your entry. Your entry should be somewhere here, as I said. Your stop loss here, and your target profit is next to. Okay, so just as I told you, for taking your entry for a continuation of the trend, you want to take your entry just at the break here. SL here, your TP here. Simple trade, and you're doing well. Okay, so let's go to the next one. Let's look at end of trend. What are the factors that we see we use to identify the end of a trend? Okay, what is the factor we see to identify the end of a trend? Now, look at this now. I want to show you guys two things. If you can know and keep to these two things, you will thank yourself later and you come back and thank me. Now, what do I mean? Look here. Something happened here. The sell candle, if you see the sell candle, is longer than the buy candle. It's called an bearish engulfing candle. It's called a bearish engulfing candle. Now, let's look at this too. Follow me, guys. You don't want to miss out, as I said. Look at it. What happened here again? That is the same thing. That bullish candle, which is the green candle, is bigger than the sell candle. It's longer than the sell candle. It is called a bullish engulfing candle. Okay. If you can see this show up at your zones, Baba is a soft trade. Enter. Make a better lot. Okay. So what do I mean? For you to identify the end of a trend, there are things you would see. I've given you three factors. I'm coming here again. In this scenario now, we have this engulfing candle that played out at the zone, at the support area here. Okay? You see that engulfing candle. What is an engulfing candle for those that don't know? Again, an engulfing candle is the candle that the body covers the previous candle. Okay? The body of that current candle covers the previous candle. That is an engulfing candle. So in this candle there, you can see this bullish candle engulf the previous sell candle. That is one of a sign that this market, the bullish presence have taken over. You're expecting it to go up. Okay. Secondly, as I gave you before, you can see we have a lower high, lower low here. But now we have a higher low, which is that dip there. We have a high here. And we have also higher high, and we have this. Now with this now, you are sure the market has changed trend. Thirdly is this is not here. This is one of the. I told you what I'm teaching you with is the book I use for the master class. This book carries chart patterns, sniper entries, confirmation, confluences. It carries all you need to be a profitable trader. So I'm just teaching from one page of the book. If you need this book, you're free to chat me up on WhatsApp. Okay? I think my number is on my bio. I don't know. I will still write it on the screen. So another thing we have here is what we are talking about, patterns, which I said earlier. Patterns is in the book. The pattern, we have a head and shoulder, inverse head and shoulder here, and this is the neck. Okay. We have, this is the left shoulder, this is the right shoulder, and this is the head. Okay. Once you spot a head and shoulder pattern, it is a bullish reversal pattern, and that tells you that the trend has ended. It tells you that the trend has ended. In this scenario now, you want to take that trade with all confidence you have, knowing that it's going to be bullish. Okay, knowing that it's going to be bullish, so you want to take the trade with all the confidence you have. So head and shoulder or inverse head and shoulder is a reversal, confirmed reversal pattern. That once it shows up, you know where the market is going to, and you take that trade with all the confidence you have. Okay, guys, I think I have to go prepare. Okay. For those that want to join the masterclass, I'm leaving you guys soon. That's why I'm doing this now. You can hit me up on this. Okay, 806345. Okay, 3582. Okay, so I'll be leaving you guys soon now. I need to go and prepare. I have some students to attend to. So see you guys tomorrow. Hopefully I will come live tomorrow, and I'm going to be teaching you. I will continue this topic. That was yesterday. I talked about Fibonacci, how to use the Fibonacci tool, and it was massive, guys. I know you guys learned a whole lot yesterday. Fibonacci class, I really exposed a lot for free. So today I'm doing same. So hopefully I'll come live tomorrow again. So feel free, guys. Make sure you subscribe. As I said, make sure you subscribe. If you're not subscribed, you are missing out. So I'm going to see you hopefully tomorrow, guys. Have a nice day.